All right, I'm gonna get started, guys. So I want to pick up a little bit where I left off last week before I get into that, about the advanced sales and some of the new things we're gonna be doing to increase your sales value. I want to kind of go over the numbers. I want to go over this. I'm only going to tell people numbers that put it in the chat. So some of you guys might be on the call, or some of you might hear this recording, and you might be like, "Hey, Kai, I forgot me." But hey, we put it on the group meet. You guys got to stay engaged and kind of put your numbers up there so I can do it, just to keep it a little simpler. Tanner, we have three families help. Curvin, 6 families help. Chappelle, 4 families help. Chantel, 4 families help. Jeff, 6 families help. Emmanuel, 5 families help. Richanne, 2. Calvin, 2. And Nico, 1. But I definitely want to give him a shout out for his 1 being 20,000 in paid commissions. And that's perfect to end with him, because that's kind of going into what I'm going to talk about. You know, what I want us to do is I definitely want us not to miss out on these advanced sales and, you know, thinking that it's big wheel hunting, because you're dealing with people every single day that are in need of our products, whether it's an annuity, whether it's an IUL, or whether it's a dividend paying whole life where you're creating that infinite banking system where people are becoming their own banks. So, guys, y'all want to take notes on this one, because this is going to be, you know, I'm going to leave some decent jewels on you guys that kind of bridge the gap. Because I don't want you guys focusing on learning this so much. I want you guys to focus on how to sell it, right? Or how to recognize the opportunity, right? So just imagine if all of you guys out here are writing, you know, we should be writing 20 apps a month, right? If we're working. So while we're out here writing our 20 apps a month, and we're getting closer to 20,000 or better on a monthly basis issue paid, how would it feel to pick up one of those $20,000 commissions in one house? How would it feel to be able to pick up maybe a $15,000 commission in one house on top of the 20 families that you're helping, right? That's going to give you that energy. That's going to give you more capital to be able to invest and scale and grow your business, right? And it is called working smarter than harder, right? So first thing I want you to understand is with the annuities, everybody need it. Everybody need it. Everybody's afraid of what the 401ks are going to be doing, right? Everybody's afraid of the volatility of the market. It's all on CNN. It's all everywhere. Every time you look up and you see the news, you hear people talking about 401ks, you hear people talking about retirement. People are not retiring now. So all you got to do is just ask, hey, how much of your portfolio is insured towards your retirement? Do you feel like you're properly set up for retirement? You literally ask that question while you're selling the final expense policy. I picked up statements in houses where I didn't sell life insurance, but I sold an annuity. You know, I was in a house where the person couldn't qualify for life insurance because of their health. Well, we rolled over $200,000 into an annuity, and we was able to use that annuity to pass on to their family tax-free, just like life insurance. Oh, by the way, you get 5% of that commission, right? So that was $10,000 of commission. And it was easier than selling life insurance because the person had lost $32,000 in the last 4 months. So can you imagine telling somebody that lost $32,000 in 4 months, hey, we can take your money, put it somewhere we can still grow at that same rate of return without any risk. They'll do it in a heartbeat. But even find out if they have $200,000 sitting in their 401k or sitting in their savings account or sitting in their retirement. You just got to be comfortable with just having a conversation about money. And that's literally just asking about retirement. If you ask every person that's over the age of 40 about their retirement, I'm telling you, they're going to have something to say. Either they're planning it, they're not planning it and need to start planning it, or they're worried. Something's going to be going on in there. And once you get that concern, that's when you capitalize. When it comes to the IULs, that's going to be the people who need to plan for retirement, who need to start saving for retirement. And here's a book that everybody should have, because a lot of you guys on the call is new. This call is for you guys. And for the guys who already have this book and read it, read it again. And if you haven't read it and you heard me talk about the book, then you really should read this book. It's an easy read. It's called Tax-Free in Retirement from Patrick Kelly. Tax-Free in Retirement, Patrick Kelly. The book is like this thick. You can finish it really quickly. And if you want a cheat code, skip to chapter 18 and just read chapter 18. That's just giving you a cheat code. I will read the whole book just because it's going to give you more scenarios on how to approach people. However, the next book you need to look at, and that's for your IULs, is Stress-Free in Retirement, right? That's for your annuities. I would read that book too if you're a reader. If you're not a reader and you don't want to read that book, that's fine. The annuities are going to sell itself right now. They're going to sell itself, right? Can you imagine having a vehicle where you can put your money into, grow it at a high interest rate with compounded interest with no risk? Better than a CD. It's just as safe as a CD. It's just as safe as a savings account, but it's able to compound interest over time. Simple as that. It's doing three things for the client that you're selling it to. It's giving them safety. It's giving them growth. It can potentially give them income down the line, because the number one fear for people that are retiring is what? Running out of money. When you turn 65 and up and you're going into retirement, your biggest fear is running out of money. That's your biggest fear. So if you can honestly attack those things head on, and you heard me say this on the last call, the previous call where we was talking about this, is GLIS, growth, legacy, income, and safety. Growth, legacy, income, and safety. You want to pick two things. What are the most two important to you? Once you get these answers, guys, all you guys are going to do is just have an inventory sheet where you're writing these things down, getting these answers, and then you're bringing it back. Guys, I'm going to start tracking how many wealth accumulation or financial conversations you guys are having on a weekly basis. I promise you, if we start having the conversations more, what's going to happen is you're going to realize how to get to the first stage. And then you're like, dang, man, I got to the first stage 4 times. Some of you are going to get straight from the first stage to the last stage on your first one. Some of you, you're going to have 5 getting at the first stage, and then you go to the second stage, then the third stage. But if we do this every single week for the next month, I promise you, a lot of you on this call are going to be coming back with higher end policies. A lot of you guys are going to increase your revenue just from asking these simple questions. Meaning, you go in a house and you write a $1,200 policy, and you would add on a $12,000 policy. How's that sound? In the same house. And you literally spending the same amount of time. You're just asking a different question, right? You're just aware of what you do. You can call yourself a full financial planner. Don't call yourself a financial advisor, because you have to have certain licenses for that. But you're a financial planner. You're a retirement specialist. You can use those words. You sell annuities. You have a fixed annuities license attached to your life insurance license, right? Now, here's the third thing that I promised y'all I was going to get into that I didn't get into a chance in last week. And that was this infinite banking. Guys, I kind of wanted to juice you up first. And then the next time I'm going to have Scott on the call. Scott is FFL specialist for the infinite banking system. He's the guy that everybody at FFL goes to help with illustrations, to break it down. He's going to get on the call. I'm going to try to get him on next week to kind of break it down even more and kind of go over some scenarios. But Genesis, is it possible that you can pull up the illustration? Just type in Scott in my email. Sorry, guys, I should have had that. But while she's doing that, I'm going to explain it to you. Guys, the infinite banking system is simple, right? It's becoming your own banks, right? I want you guys to just type in the chat if you have a car note. Yes. Bring that up on the screen for me. Just type in the chat if you have. Sorry. All right, sorry about that, guys. Type in the chat if you have a car loan, a mortgage, if you have a personal loan, credit cards, anything that you have where you borrow money and you're paying interest on it. I don't care if the interest rate is 6%, 20%, 18%. We all have some type of debt that we're borrowing against, right? We all have it, especially all of us, because we're all adults. We all got some type of debt, right? There is a good thing as good debt and bad debt. Mike, all the above. We all have them, right? We're spending money every single day. Some of us spent $50,000 last year on all of our expenses and bills and pleasure. Some of us spend $150,000, right? Some of us spend more or less, doesn't matter. What if I can tell you with this infinite banking system is a way where you can actually gain interest on the money you spend and compound the interest? Guys, this is an analogy that you guys want to remember. So if you have to go back and watch this video again or write this down, this is something you want to remember, how compounded interest works. If I give you, can they unmute themselves on here, Genesis?
Yeah.
Okay. Guys, whoever unmute and get this right, $50 gift card. So don't all hit me at once, right? Wait till I finish. What would you rather have, right? And I'm only going to take 2 people. Which would you rather have? In fact, I need whoever types in the group, in the chat, you don't have to unmute. Whoever types in the chat first and get it right, get the $50. So guys, y'all better be ready. What would you rather have? $1 million right now, or a penny that doubles every day for the next 30 days?
Ooh,
Curve, guy.
Sorry.
All right, Curve, you got that one. Don't worry about it. I'm gonna test somebody else. I'm gonna give y'all another chance to win another card. Curve, you got that one. All right, so yes, it is the penny. Now, whoever can raise their hand first on this next one, don't cheat. I'm gonna give y'all a chance to explain why. And if you're right, you get another gift card. You get a $50 gift card. Who can explain it? Start now. Whoever can hit the hand up first. The raise your hand button on the chat.
Y'all better find it.
If you get it wrong, somebody else can get a chance anyway. I gotta work. Yeah. I gotta learn how to work Zoom. Go ahead, answer that. Unmute. Unmute for me. He can't unmute. I think you put it on lock.
All right. I'm here.
All right.
You said why would you pick the penny?
Yeah. I want you to give me your most condensed answer that you can give me on why would you choose the penny, doubling every month for the next 30 days over the $1 million right away.
Because the power of compound interest is the 8th wonder of the world. That's what Albert Einstein says.
Yes, sir. Yes, sir. Now listen, you gotta dumb that down for me, bro, because I understand you, but I don't understand it.
All right. So it's all about the power of compound interest, right?
Okay.
Warren Buffett talked to it a lot. If you even look at Warren Buffett net worth throughout his whole life, it was like kind of gradually going up. And then when he got like to a certain age, it just went buku up. But that's just the power of compound interest. So you got a penny that doubles, right? So you got they turn the 1 penny, 2 cents, 4 cents, 8 cents, 16, 32, and it just keep going, just keep doubling every day.
Let me do this, Ed. Just because you unmuted and you was brave, you got that. This is the last gift card I'm gonna give out. This one gonna be $100, right? If you guys can tell me what the number is that the penny equals to in 30 days, all you gotta do is take your calculator, put 1 times 2, 2 times 2, 4 times 4, and just, I'm sorry, 2, sorry. Just keep times everything times 2. 1 times 2, 4 times 2, and whatever that number is, just keep hitting it times 2. It's double. Keep times it times 2. Count it out 30 times. And when you get to 30, tell me what that number is.
Oh, yeah, I
While
can't
you
answer
guys are
this.
doing that, huh?
I already know the answer, so I'm not going
I
to
know you know the answer. No, you already got $50 there. You can't take it off. And I'm trying to get everything. No, man, get somebody else a chance, man.
I'm gonna do the Jeopardy song. Dun, 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 dun,
It's I know you know the answer, Ab. It's gonna be crazy.
That's $1 million, right? Never
No,
mind.
not a million. Kyrie, if I could share my screen, I could actually show them what it looks like as well once you if nobody don't get it.
Somebody said you didn't put the 12 cent, Tasha. I'm gonna give you 12 cent, man. All right, so we got Tasha.
I need
Now that number is what? Over 5 million, right? Now y'all understand why we chose the penny. That is the power of compound interest. Can I see the screen? Yes. Can we make it bigger?
If you
All right, guys, I'm gonna go over this. This is an actual policy that I'm working on, okay? This policy is a policy that
maneuver here.
perfect. All right. So this policy right here, guys, is a policy that I'm actually working on. It's $1 million dump-in with a death benefit of 22 million. Okay. So basically, what this person is doing is they're dumping $1 million. They're dumping in $1.3 million into this policy. Within 30 days, they're going to be able to access 89% of this policy to be able to borrow out and spend like it's cash. I'm gonna leave it open for questions when I finish this, because I kind of want you guys to kind of get your brains working and to understanding this concept. But to keep it very simple, he put 1.3 in. Instead of putting it into his bank savings account, he put it into this. His legacy that will be left behind to his family if he dies tomorrow is 22,683,000. His net cash value instantly is $956,446, which is about a little over 80% of the policy available immediately. He can take out that full 956,000 and start paying his bills, start buying real estate, start doing whatever he wants to do. Now, this is a larger policy. It can be done on a lower scale, but I'm just showing you this one because this is what I'm doing. What he's going to do is he's a hard money lender. So he's lending this money out to 9 people, 100,000 each. They have 12 months to pay it back. He's charging them 15% interest, and it's attached to properties. So if they don't pay his money or don't pay his interest, he puts a lien on their properties. This is what most real estate hard money lenders do, right? Now for you, you're going to do it a little bit differently. You're going to be your own hard money lender. Let's just say you start out with 10,000. They put 10,000 in here, and you'll have access to about 80 to 95%. So at 10,000, you have access to 8,000 to 9,500. If you have access to 8,000, you'll use that same 8,000 that you have access to kind of pay your car note, to kind of pay this, to kind of pay that. It's growing a compound interest of 4%. So if you look at year one, the cash value and the dividend that was paid, I'm sorry, pull that back up. The dividend that was paid the year one was $115,000. That's how much the dividend that was paid that year. The next year, the dividend that was paid was $100,000.
I think you're muted again, though.
Sorry, by year 10, they're getting a 120% return. Guys, what that means is if you have a policy for 10,000 or $1 million, if you put 10,000 into this policy over a year, whether you pay it flat out cash or pay it monthly, in a year, the dividend interest that you gain was $12,500. So that means you put 10,000 in, and at the end of the year, you have 22,500. Amazing. You can't get this on any bank account, anything. This is your personal bank account. Now, I'm going to get more into details. I kind of want to know where your brains are at, like, because I don't want to overcomplicate this. I kind of want to know where you guys are at, what questions you have, so I can clarify it. So that way, if you have it clarified now, all you guys got to do is kind of be able to sell the concept. And then we'll get on the phone with the client and we'll close it. They don't have to be millionaires like this person I'm doing. They can invest 10,000. I have a policy like this. We all should have policies like this. And we should be selling a crap load of them. Now, you'll get paid the annual premium of the policy, plus you'll get paid 3% of whatever they dump in. So if they dump in $1 million, you'll get 3% of the $1 million, which is 30,000, plus the annual premium. And the annual premium on this one is like 12,000. So you just made close to 20, well, no, I'm sorry, close to 42,000 off this one case. Guys, I want you guys to raise your hand if you have a question on this concept, because I kind of want to see how your brains are working and kind of get some clarity on this. Because I know some of you are going to understand a little bit more than others because you dealt with certain finances before. But I kind of want to clarify it so that you guys can find these opportunities. And then next, I'm going to start challenging you. I'm going to create a sheet. There's going to be a sheet where you guys are going to have to ask these questions in every single house. So I'll be having that out by Monday. Make sure it's on a group me, make sure it's on our platforms so that you guys can access Telegram, so you guys can access it. And so that way we can start increasing our revenue and working smarter on top of harder. Any questions?
Does a person have to have
Yes, unmute Mike. Talk to me.
Yeah, I'm sorry. I'm a little bit familiar with this concept.
Okay.
I mean, you're basically overfunding a permanent life insurance policy.
Yes,
I'm looking at the illustration pages you had there. I assume, as I said, this isn't like an IUL. This is a dividend participating dividend whole life insurance policy.
Yes. Here's the difference between the dividend paying whole life policy versus the IUL. IUL is a long-term strategy, right? It's a long-term strategy. Your interest is going to compound over years, right? So in a policy I did before, it was 20,000 you dumped in every year for the next 20 years. The guy's 30 years old. In 20 years, he'll be 50. He's been to put 400,000 into this policy. His cash value will be 1.1 million. Along the way, he cannot access that money. I mean, he can, but there'll be penalties and things attached. So that's more of a planning for retirement, planning for wealth accumulation. What the dividend whole life policy does is it gives you immediately access to your cash. So it gives you liquidity, right? It allows you to be able to take, if you got 50,000 sitting in your checkings account or savings account, it allows you to take that money out of your savings account and put it into this insurance policy, right? Because even though you have 50,000 in your savings account, the bank is still lending it out to me for my car loan. You just can check your app and see your 50,000. And most people with 50,000 sitting in their savings account is not running to the bank and taking all that 50,000 out at once. But they're gaining 0.000 point interest. What you're going to do is you're going to gain a fixed return of 4%, right? Compounding over the years for just having your money in this vehicle. And here's the great thing about it. You have liquidity. You have access. It's liquid, which means the first time it takes 30 days for you to access the money. After that, you get a portal and it takes 7 days to access the money. So say you put the 10,000, the 50,000 in there, 10,000, 100,000, whatever it is, you get 75% to 95% access. So that's just say you get 80% access. If you put 50,000 in it, let's say 10,000, just keep it easy numbers. Within 30 days of you putting the 50,000 into the policy, you can take 8,000 out and spend it just like cash, right? And instead of paying your personal loan back, you pay this back. And if you have enough money or you save enough into this policy over time, let's say your car note, let's say you bought a car for 40,000 and it's a 5-year term. What you'll do is you'll fund this policy. You need insurance anyway, and you'll gain interest over 3 years. 3 years, you'll have enough based off the interest, and we'll do this individually. So don't think about knowing this too much. I'm just giving you a concept. In 3 years, you'll gain enough interest to be able to pay off the car for 40,000, plus pay the interest rate that you had to pay over those 3 years, and avoid the interest that you would have paid over the next 2 years, right? And then it's time to fund it again so that you can pay your house off earlier, so that you can pay your credit card debt off earlier. You're using the interest that you're building in here to match and pay off the interest that you're accumulating with these loans, with these mortgages, with these car notes, and things like that. Your bank account is not going to do that. No matter if you save extra so you can put more towards your principal or your mortgage, or you save extra so you can put more to your car. Because the interest rate just doesn't build enough. But the only thing you guys got to remember is the compounded interest. And the more you get the conversation started, the more you'll realize a lot of people know about this. It's called infinite banking. I'm going to challenge you guys to get on YouTube on your spare time. This is yellow activity. Just search the strategy of infinite banking. There's so many videos on YouTube. They're all over. People are being consumed with it. And you didn't know you actually have access to sell these type of policies. And I'll tell you this, your typical policy that you're going to sell with infinite banking is going to be about a 10,000 plus commission. So guys, I told you I was going to give y'all some more knowledge. I don't want to overwhelm it. Anybody have some other questions where it's not clear to them or something they want to know more about these advanced strategies? Otherwise, be looking out Monday for this kind of cheat sheet I'm going to create for you guys to open up the conversation. At the very least, even if you're in an appointment where you're selling final expense or mortgage protection, or you're talking to a friend, or you're talking to somebody who you think might be interested in, and you just pull out the sheet and kind of read off the sheet. Your guys are going to pick up sales just doing that. I just told Nico to say a few things to his friends, and that's how he wrote in the last month and a half, 3 policies over 20,000 paid commission. He literally just said, hey, do you know it's a strategy that you can save for retirement where it's tax-free? Having a tax-free retirement will add over 100,000 plus to your net portfolio in retirement. You want to learn how to do it? And that's it. That's it. Didn't overcomplicate it. I gave him 3 things to say. You got tax now, tax deferred, and tax never. Which one would you rather be? Tax never. Okay. Hey, you mind if I could show you how you can plan for retirement and not pay taxes? Just that simple. Go ahead, question.
I have a question. Is there a minimum dump-in?
10,000 is the minimum you want to do because it's going to be fully underwritten in most cases.
Okay.
So you definitely want to do 10,000 minimum dump-in if they dump it in. If you can create these policies where someone can pay on it monthly. So for example, they can be paying $1,000 a month for the next year to accumulate 12,000 or into this policy or 10,000 into this policy, right? And then after a whole year of dumping in, they'll have 10,000 where they can use that 10,000 plus the interest grown on it to be able to start paying their cars off, to be able to start doing those things. By the way, you get paid on the commission of the 10,000.
Okay.
So you'll get a $10,000 commission.
Okay.
So you win either way. You win whether they do a dump in or they just open up this policy. They win either way because it's killing 3 birds in one stone. Number one, your face amount, you're killing your insurance, you're becoming your own private bank, and you're gaining interest and yields on your money, compounding that. I don't know any other vehicle that gains interest consistently, stably as a policy like this. So anybody that has money needs it. Anybody that doesn't have money but want to get out of debt needs it. Pretty much anybody that can qualify for this needs it. And they will get it if they understand the concept.
Okay.
You guys should have it yourself. Talk to me if you want to learn on how to write your own policy on yourself, get paid for it, and kind of understand it from doing it yourself. Because if you understand it more, you'll be able to teach it more. So why not get paid while you learn? And you can actually show your own policy to friends and families, show your own policy to clients. All right. So I did see that last chat. I saw that chat that you put in there. I'm gonna close it up in a second. Trey, let me see. I'm trying to keep track of everybody in one. Curve 1, Ab 1, Tasha 1. Trey. Emmanuel, the Emmanuel one?
Wait, who got
No, it was
the
Tasha.
pennies? The pennies. Who got the answer for the pennies?
It was me.
It was Tasha.
Tasha?
Yeah.
Okay.
I know Ab 1. I know Curve 1. Tasha, you won. Trey, I'm not sure. Did you remember? Did Trey win anything?
I just remember Tasha and Emmanuel answering that question.
All right, well, listen. I'm going to be nice this time. Next time, y'all guys got to be on point. And Sergio, I'm going to give you a $50 gift card. And Trey, you get a $50 gift card. All right? So keep track of that.
Thank
Genesis. You got it. No problem, Serge. So we got Serge, Ab, Tasha.
She answered first. He got the 12 cents. He didn't really get the answer. They got the exact answer.
And then I'm going to give Trey. So that, all right, Genesis got track of it. We'll make sure. Hey, listen, last thing before I close the call. Most of us are all in Philly and close to this area. Monday, we're doing our BDM. Here's another way to win some money, right? You guys are going to get your gift card on Monday. You got to come up and get it on Monday at our BDM. Here's the thing. You have to invite somebody. The person who invites the most people will get another $100 gift card on top of that. The second place winner will get 50. Here's the problem. I don't know if you guys are going to talk to each other. I don't know if you're just going to flat out win the money. I don't really care. It's a minimum. A minimum. We have, 15 people on this call, and we probably have about 30 agents local. If not more, I'm going to just say 30 local. I'm guesstimating 15 people on this call. If 5 people have to at least bring one person. If 5 people don't bring one person to introduce to this business or introduce to our opportunity, the bets is off. You still get the money that you want on this call because I won't go back on my word. What if we're not local? If you're not local, we'll work something out, Emmanuel. Then your job is you send me a text if you're not local. Send me a text, and then what you have to do is you have to get 3 people to have on our next call next Thursday. 3 fresh new people. I'm gonna open it up for people who are not a part of our agency, but who kind of want to learn about our opportunity. I'm not going to cater to the new people. They're just going to be a fly on the wall. We're going to continue to do what we're doing. All right, perfect. Sergio, you got one question before we close out? Or that's old hand up.
Yeah, that was an old one. Genesis already asked it, though. It was about the minimum.
Okay, yeah, good. Yeah, we're going to get real deep into this next week. I'm going to have Scott, our specialist, jump on here and kind of go over things, the numbers for you guys and how to play with it. And guess what? He's going to be the guy who's going to play with the numbers behind the screen. I'm going to be the one to play with the numbers behind the screen. All your job is to find them. And trust me, everybody is going to need them. But hey, back to my last point. Remember this, just so you know the rules. Genesis, I'm going to have you put this on the chat so that you know. Monday, for the people who are local, Monday is your chance to win, to get this $100 gift card or $50 gift card. For the people that are not local, Thursday is how you're going to get your gift card. That's it. We're going to close it out, y'all. Appreciate y'all, and that's win.